Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. We're going to dive right in, take a look, see what people are sharing. If you want to follow me at Finance, and if you want to join our community, finding-value.com. That is where I dive deeper into everything, looking for potential investment opportunities. I do go over presentations from companies. I listen to quarterly earnings conference calls. I look at fundamentals. I look at technicals, and I try to see and find the alignment between cheap sectors, good companies, and then sharing that with everyone in the community. We do have a coupon code. Discount is currently active at this time. So HFI research says early Jan shows colder than normal Europe along with the US, and this is the natural gas European Union inventory levels. The red is 2024, and we're getting a little bit steeper decline in those inventories. We're getting larger drawdowns of inventory versus the past couple of warmer years. The blue is 2022, the red is 2024. 2017 to 2021, which is kind of the average, is the one below that. Adam says, his opinion, the liquid natural gas producers are essentially trading at their liquid valuations. Tons of upside, especially in the extremely high quality Montney reserve names. This is natural gas. What this is called is a point and figure chart. You get a nice big base. We're starting to break out of this and create potentially a higher high, and we could be breaking a downtrend that he's got there. And we could see a triple top breakout, which actually has occurred on November 21st, and we could be breaking other patterns here too, which could turn into a very big move in natural gas. We have positioned in natural gas for some of these moves on the website there, and hopefully you guys are still holding on to them. KKR thinks we're entering early cycle. Says our cycle indicator has been in contraction for more than 2 years now. That's your recession slowdown. Importantly, though, we are optimistic that as we transition through 2025, the model will progress towards an early cycle territory, in their opinion. So this is what they're seeing. This is what they've looked at looking backwards. We've got contraction phases. So basically, if you go to 0 and you're underneath 0, it is a contraction phase. Early cycle is when you get these green where we start to grow again and are just above the 0 areas. Mid-cycle is when you get into a good growth area, and you can go sideways in that growth area for some time. And then after that, you get a late cycle yellow area. So the thing that looks a little bit weird to me is how do you go from contraction in 2020 to late cycle into mid cycle? I think this is supposed to be green here. But that's what we've gotten. They think we're entering an early cycle where we start to go back into growth here for 2025, in their opinion. And we've been in a slowdown. It says our US cycle indicator has been in contraction since 2022. It's now inching back upwards. So that's what they've got. Oh, and here's the KKR GMAA proprietary cycle indicator. And this is kind of what they use, I think. Contraction is job quits, earnings revisions, home builder sentiment, new orders. Early recovery cycle is the yield curve, inventory sales ratio, and the M&A volume. Mid-cycle is credit spreads coming on up. And then job claims, KKR indicator for a late cycle slowdown. And this cycle may not be the real estate cycle. It might be something else that they're measuring that is on a shorter time frame than the real estate cycle. The short bear says, seeing doomsday predictions about the dollar. A lot of charts are oddly familiar to the 2016 presidential term. The biggest US trade partners are starting to agonize over the higher dollar. And here is the 2024-25 US dollar index laid over 2016-2017. We had a nice strong dollar come on up. It peaked and then rolled over. And what this is saying is that the peak could be here in December. We roll over in January, well, mainly late December, January. And then we go down, 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 down for the first half of 2025. That's what happened in 2016, 2017. That was also a really good time frame for precious metals, and the mining companies did really, really well. And that was the ultimate bottom for commodities. Could we get a bottom here in commodities on a weaker dollar coming? Maybe. Looks kind of similar to the 2016, 2017 era. How bad has December been for energy stocks? The S&P and TSX capped energy index is down 9% on the month and is having its worst month in 27 months. All the while, oil is unchanged. We remain hopeful for a Santa Claus rally once tax loss selling ends, in his opinion. Uh, you can see December. Um, it's kind of a mix. It looks like it's half and half down, half up. Looks half and half too. But look at this. This was in 2020. March, 48% down in 1 month in 2020, in only 1 month. And then there's your bounce in April. If you could buy the fear, you got a pretty big bounce of almost 30%. Here's another 30% here in November of 2020. So your good buy point was March, and your good buy point was September, October here in 2020. And then you had the big 33%, 6%. It was down slightly, 22. These are all big up moves here. 18% in September again. All right, so coming on down to Crypto Bitlord. He says, honestly, screw crypto and sorry to anyone I got involved in this crap. It's 100% a scam. Stay away if you're reading this. I don't know if he's being true, but I think a lot of it is a scam. Yes, you're correct. Howard Marks says, I'm a great believer in the cyclical nature of the markets, but I never cease to be amazed at how far they can go in one direction and for how long. The extremes they can reach despite logical arguments to the contrary, and the swiftness of the swing back, says Howard Marks. And Howard Marks is he was a guy that ran what is it, the Oakmark, I think, fund. Kevin says China is transitioning to renewables update, and this is from our boy Doomberg. I'm sure he probably said that coal is going to go down in its consumption, but yeah, it's going straight up. Wrong, wrong, and more wrong. So, how are these guys all getting it wrong on this energy transition? A lot of people think that we've got endless amounts. They compare reserves to flow rates. Wrong. Um, Coal's been going on up because we need more energy, flat out more energy. And I don't think wind and solar are actually viable alternatives. We can use it, it can supplement. I agree. But I don't think it's actually going to reduce coal, natural gas, and oil. Norway. Norway is the leader in electric vehicles being sold. I think it's something like 90% of all new vehicles in Norway um, are electric vehicles. And guess how much their oil has gone down? It hasn't gone down, it's gone up. It's gone up, even with all of that adoption of EVs. And you know what's going to be even worse? They're going to reject EVs, and the people are buying more gasoline cars. Interesting, guys. No transition is occurring. Sorry. Bitcoin, probable path, game over. I don't know if that's the path, guys. I just like watching this stuff. And I'm not a Bitcoin guy. I think it's probably a big Bitcoin's not going to be our crypto. It's going to go away. It's going to go to some other crypto that if crypto is adopted, it's not going to be Bitcoin. It's going to be something that uses far less energy, that can transfer value far more quickly, and is far easier to use. Bitcoin is like the Betamax of VHS. And something's going to come out that's going to be 1,000 times better, where you don't have to have these stupid passwords, the wild, wild west, sending it to the wrong address, losing money, gigantic fees. It gets rid of all that crap. And then old people will actually use it probably too. Uh, so here's Patal. He says, everyone is a long-term investor until their stocks are down 10%. Yeah, that's basically it. What I do in particular, this is what I try to do, is I try to take advantage of people that are selling and I buy it. And then I hold for a longer time frame than what most other people do. That is my advantage. Now, I don't try to time the market in the short term in terms of like trading it. I just buy when it's cheap. And if there's a good entry point, technically, I go get it. And, you know, the strategy that I've adopted is my realization of how other people made a ton of money. So if you look back at between the years 2020 to 2022, I am willing to bet that my return during that time frame has beat the majority, probably 90 something percent of traders' entire careers in 2 years. And that's kind of what happens when you take a certain strategy and you hit it. Now, I think that strategy works and I've adopted it completely. I'm still learning and refining it as best I can. I'm trying to learn from the greats, the Peter Lynch's, the Howard Marks, Monish Pabry and Buffett and all those guys. And then I'm not taking their strategies at face value. I'm adopting the majority of it and applying it to what I also know and what I like. So the strategies are sound, the statistics are sound, and the psychology that those guys exploit is sound. A value-based approach is exactly what you want to do, and I agree with the majority of it. Most everyone else, what they try to do is they try to get rich quick. And then these small pullbacks, I mean, 10% is really not a big pullback. Um, they sell out. They get scared. They have no conviction. They have no strategy. They have nothing. They're just gambling. And that's kind of what crypto is. They're just gambling. That's all they want. Hey, it's going up. I'm going to go buy it. That's all they know. That's all they want to do. Time's on your side when you own shares of superior companies, says Peter Lynch. Yeah, if you own good companies, time is on your side. You just sit and you wait and you wait and you wait. Some people say, what if it doesn't go up in a year or two? My answer is, well, how much could it go up? Um, Manish gives a couple of examples where he bought a stock, it didn't go anywhere for like 2 or 3 years, he sold it. And then the next decade, the companies that he sold, multiple companies, went up 300x and 500x. These guys are making their money off of asymmetry. And asymmetry does not come in short time frames. You can get some, but you're never going to get a 100-bagger without holding it for a decade. But that also means that you're going to go through multiple drawdowns, probably between 30 and 70% drawdowns during that time frame. So you have to learn the game to master it. And you have to take the correct time frames. You have to do all of the things that these guys who made money out of the markets, you have to adopt their strategies. If a certain strategy has worked for a lot of people and other strategies we haven't seen near the success rate, why wouldn't I adopt the strategies that work for these guys? And then understand exactly what they implemented, exactly what I'm doing. The problem is, most everyone doesn't adopt those strategies because of excuses. Oh, it takes too long. I want to make money faster. Oh, so you want to make money faster than all of the rich people that made their money. And what that requires is luck. You need luck. And I mean, it can happen, but you need luck on your side. And more than likely, you're probably taking on far too much risk and you're going to lose it all anyway. So it's a function, if you want to do it fast, it's a function of risk, taking on a whole boatload of risk and probably using leverage, and then lucky, getting lucky. There are times in the market where things can happen more quickly, but they don't come that often. And that's where you get the sayings, you got to be greedy when others are fearful. Because when everybody is fearful, you got to get in there and buy the living crap out of it. And that's where people can't do it. They can't do it emotionally. So you have to study the game, learn the game, see what strategies these guys are employing, and then you got to train yourself to do opposite of everyone else, which most people are just cattle in the herd. I hate to say it. It's very difficult for them to do that. When stocks go up, all you see is the upside. When stocks go down, all you see is the downside. And you see nothing about the business. It's all about the price. Emotions, price, oh my God, sell. Emotions, oh my God, it's going up, I gotta buy it. The implosion of German industry starts to exceed COVID lockdown and is only comparable with the great financial crisis in 2009. And this during good times, what will happen during the next recession? Question mark. But hey, why don't you vote for 4 more years of green economic wonder? So here's the chart, German IFO orders inventory. Look how low that is. Now, I don't know if this is a bottom either. Like, if you destroy an economy, like maybe this is going to keep going down. Maybe it bottoms. Tough to say. Here's North Star. It's entirely possible that the stock market indices are setting up for a drop of more than 50% next year, a capital rotation event. That very well could be the case. Look at that RSI rolling over there. It may not be the case. And here's something, guys. Too many people they put too much focus on technical analysis only. A lot of people do. What I try to do is I try to incorporate everything I can find. Longer term cycles, technical analysis, fundamentals. Fundamentals should match the technicals. And sometimes if you can figure out what is the leading factors that humans behave a certain way, and you can kind of front run the technicals to some degree if you're really, really on top of it. But yeah, we'll see how this plays out. I do think a capital rotation event will come. I don't know if this is the exact moment. Here's Grady. Think the stock market has two options, blue route or the pink route. Secular bull is topped, or we have a secular bull final blow off. That's his opinion. We've got two different opinions here on what potentially could happen. No one knows the future. So what strategy should one deploy? Should we just do technical analysis, or should we adopt something where you buy value and then you avoid stuff that's overvalued like the NASDAQ? That makes more sense to me. Warren Buffett quote, an investor cannot obtain superior profits from stocks by simply committing to a specific investment category or style. He can earn them only by carefully evaluating facts and continuously exercising discipline. HFI says, I don't know who needs to hear this, but heating demand is going to spike in January. Anyone that thinks Q1 2025 will show a build is about to get a lot of eggs thrown on their face. So he thinks cold weather is coming in January. We've got Eric Nuttall on YouTube here. So with BNN downsizing the team and now their longevity in question, a good decision to talk directly to your audience. Here's the key points. Demand is at its highest level in history. Inventory is at its lowest levels in history. US shale is flat and in the twilight. OPEC remains strong. Non-OPEC supply robust. Builds are expected to be modest in 2025. 2025, the last year of meaningful growth of non-OPEC growth, inclusive of Guyana. US shale growth ends after 2025. 2027, expect no growth, and OPEC goes back into control. 4 million barrels per day is currently spare capacity, mostly held by Saudi Arabia. That's the current state of the oil market, in Eric Nuttall's opinion. We've got Grady here. He says, when silver breaks away from its blue big picture breakout and backtest versus SPX, the big move in silver starts. A true lifetime opportunity not to be missed. So this is silver versus the SPX, he's doing a backtest right now and ready to potentially outperform at some point here. Now, here's the thing. If the dollar drops that we looked at up above, that will occur. Oil will go up too. A lot of these emerging markets will go up if that dollar drops. If the dollar drops, more than likely they're in there buying probably bonds, lowering the interest rates. Warren Buffett says, I can't time stocks. I don't know anybody else who can either. Pricing is our game. That's his strategy. I'm making it my game too. Occidental Petroleum back on the chain game. So Berkshire Hathaway or Buffett is buying a whole bunch of Oxy Petroleum. Interesting that he's buying a bunch of energy. His portfolio now, from what I understand, is over 20% in energy, if you didn't know that. Vivek says someone just paid $790,000 in fees for their $13,000 amount Bitcoin transfer. Ooh, like I said, the fees are going to hit you at some point, and they're hitting now. Here's another one. Counter seasonal draw in Dicey puts us in striking distance of the bottom of the 5-year range. That's US distillate. Berkshire Hathaway purchased 8.9 million shares of Oxy Petroleum for about 5 million shares of Cirrus. I don't know why you'd be buying that. 234,000 in Verisign over the past 3 days. India to surpass China as the top source of global oil consumption growth in 24 and 25. 2022, 23, 24, this is all growth. So annual change in world liquids fuel consumption. So about 1 million barrel growth, and then we got 1.2 next year projected. And India is being a big grower there, one of the largest of the group. Other non-OECD growing pretty good too. Here's Gary Savage. He says, it never changes. Every time we get into an intermediate correction, retail traders, many professional traders panic and become irrationally pessimistic. I think I already read this one. Yeah, I think I read that one before. Let me see here. Oh, no. This is a new one. This, folks, this is a secular bull market. Bull markets make higher highs. If you don't time an entry perfectly, it isn't the end of the world. The bull will rescue all long trades. You could have bought the very top of the rally in 2022 and still made great money. Yes, it would be wonderful to get every single trade timed perfectly. But as most people understand, that is impossible. No one in history has ever done that. We got the first 3 trades this year perfectly timed. We're a little early on this one. 3 out of 4 isn't bad. And the 4th will be rescued by the bull market anyway. By spring, we will have made great money on our trade, even though it wasn't perfectly timed like the last 3. All one really needs to make money in a bull market is patience. Unfortunately, that's something most traders are sorely lacking. $10,000 gold will be a piece of cake, and yes, there will be scary corrections along the way, just like all bull markets. So far, this one has been very mild, not even down 7% so far. And I wanted to read that because it sounds like Gary's changing his mind. He's starting to take the patience game. I'm already there, so yeah, looks good. And here's Michael Oliver. He says, lots of laugh or laugh out loud. Never forget that Trump spent his entire first term pressuring, begging, posturing Yellen and Powell to cut rates to zero, to go negative even. We got 10 trillion of COVID money printing under Trump. By 2028, I bet the debt will be 50 trillion. Current projection is 42 trillion. He is a money printer. He is a dollar devaluator. That is true. And it's coming, he pressures Powell to do that. Here's another transaction detail. Someone transferred 8.32 Bitcoins worth $817,000 and paid 8.18 Bitcoin in fees, losing 98.3% of the total amount in fees and being left with just 0.14 Bitcoin. The future of finance. True. And that's the end there. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, guys. We do have a question and answer session going on right now. If you'd like to join, definitely join. The question and answer session goes from 7 a.m. to about 10 a.m. Mountain Time. So that's all I've got for today. We'll catch you next time. This is Finding Value.